Hello traders, Gary Wagner here, approximately 11:30 in Honolulu, 4:30 in New York City. It is Tuesday, the 6th day of March, 2012, and this is the daily report for gold and silver. Following suit of last week, we have another very, very sharp sell-off to the downside in the precious metals across the board. Gold changing off over $30 on the day, about 32.33 as you can see, current print 16.73. That's putting it down almost 2% on the day. Silver down over 3% on the day, down $1.09, and it is currently trading just below $33 an ounce. Now, of course, to wrap things up in terms of where we stand in our positions, we have none. We pulled profits on our silver the other day. We pulled profits on gold last week. We are looking for an opportunity to buy back in. Do I think we have that opportunity today? My short answer is no. I think we really need to wait a little bit. And here's what I'm looking at. In terms of areas to buy into, the first chart that I really want to look at, this is a 720-minute candlestick chart, so that each candlestick represents about a half day in trading. And as you can see from this chart, I've simply drawn in a basic Fibonacci area from the beginning of the rally last year, December, to the top, and from there I've looked at different levels of Fibonacci retracement areas. One critical area was the 1689. As you can see, we actually tested it the first time. That was right here. That was on that drastic sell-off we had last week. The market then recuperated a little bit and actually moved back up about $25 on the following day, as you can see here with this green candle. But that was to be short-lived because it came and tested this area, and as you can see from yesterday, it had a low there. It closed above that area, but today the tail of the tape is much different because we broke hard through this particular area, as you can see right in here. And 1673, that's our current print. We've had a low right now that has been quite below that in terms of the marketplace itself. The low, I believe, was about 1664. So it's a little bit off the low, but not too much off the low. Where do I think it's going? Well, our first major pivot point is got to be 1657. I think there's a pretty good opportunity that this will market on an intraday basis. Will probably test this. On the drastic side, where do I think that the lowest possibility that it could go to? And I'm going to have to say that would be a 61% retracement, and you would be looking at approximately 1626 in that area. So these are our two pivot points. These are our two target areas that we want to look at, because here's the thing. What we should see, and what we should see doesn't mean we will by any stretch of the imagination, but if you take a look at, this is our C, and then this is wave one, the conclusion of C. So in essence, we went, this was our C wave, this was our wave one, and now we're going to get something like an A, whether it goes here or here. I'm really believing that it's more possible to go to the 1657. We'll then see a B, and that B is going to be, in terms of percentages, anywhere between, say, 50% to 75% of the move that we saw on this first A wave. And then it will conclude with one final C. And the C, if it's a flat, will take us wherever it is, truncated above and zigzag below. Well, traders, so what about silver? Phenomenal first trade of the year on silver, in at 28.10. We got out the other day at 33.80, currently at 32.90. Is it time to buy in on silver? My short answer, again, it's got to be no. First thing I want to take a look at real quickly, though, is the dollar index. This is a daily chart, continuous contract of the COMEX basket of 6 currencies against the dollar in Japanese average or Henkin Ashi format. Up and away. You can see these green bars. That has been a thorn for the precious metals. You also have continued worry about Greece and a possible default, even though they have that bailout package. You have the equities markets showing triple digit losses. Gold showing double digit losses. We should have gone long digits today, I'll tell you that much. I'm just glad we're flat in the market and we've pulled profits. Now, where do I think silver's going? First of all, Henkin Ashi on our daily, you can see it's gone into a sell mode, and we'll have to see if it continues. We're out and we'll look for an opportunity to buy back. Where do we want to buy back at? Well, I've got a longer term weekly, but I'm going to look at the daily and the weekly for indications of areas, but I've marked them on the weekly. Let's first look at our daily. You can see that this is a clear break down. We kind of looked at this one area. That's why I've got the lines in. This is the 50% retracement. These retracements that I'm drawing are from the beginning of this rally back in the mid part or first part of 2011, hits that top, and then of course we have our ABC. This is 1, we're now in 2. Where do I think 2 is going? There's a couple of ways that we want to go ahead and plot that. The first way, of course, is going to be our simple Fibonacci retracement. Let's go ahead and put that up. And traders, all I've done, once again, is a standard Fibonacci retracement, but it seems to work pretty well for us. But we're looking at the beginning of this rally. This is the end of December, same as gold, to the top of the rally here, and a 50% move would take us to 31.79 and then 30.52. So these are my two target areas. You do typically get the steepest of retracements on your wave 2, so it could easily go to these areas. It's past the 38% already, and so therefore our real next target right now to look to buy back is going to be around 31.79 basis cash. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.